Hello again, fellow BeachBum traders. Thank you for joining us for our weekly trading game plan, part one for the trading week of May 12th or May 15th through May 19th, where we'll talk about how to make money trading and preserve our capital while the debt ceiling is looming. So again, thank you for joining us for part one of our weekly trading game plan for the trading week of May 15th through May 19th. And again, we'll talk about how we can make money trading and preserving our capital while the debt ceiling is looming. Good morning, Tony Roses. Thank you for joining us. Glad to see you. Hope you're doing well. Good morning, Mighty Soldiers Trades. Thank you for joining us. Hope you're all doing well as well. So here's our notes for part one of our weekly trading game plan. There's a Google document. It's publicly accessible. You can find a link to the notes document in the description box below. We store all of our notes documents for our weekly trading game plans in a publicly accessible Google Drive folder, so you can refer back to these notes as well as the notes from our previous weekly trading game plans in this Google Drive folder. And again, you can find a link to that publicly accessible Google Drive folder in the description box below. So again, we'll talk about, the debt ceiling is looming. We'll see if it gets resolved, if we fall into a technical default. In the meantime, we'll do our market analysis. We'll talk about our strategies, our trade ideas for making money trading for the week of May 15th through May 19th. So we'll look at how the markets ended up on Friday, go to FinViz Home. We see they dipped down. We'll talk about some of the economic data that kind of triggered this decline on Friday. Then they, all tried to recover towards the end of the day. The Dow pretty much almost made break even. NASDAQ not quite so, and S&P not quite so. We had more decliners than advancers, about 60-30, 60-40 or so. Very few new highs, only 25% new highs, 75% new lows. Still pretty split above and below the 50-day moving average, so about 40 above, 60 below, and again 40, 60 below their 200. So generally pretty bearish for Friday, but towards the end of the day there was a bullish signal. We had a market on close upward trend. You see the heat maps, generally pretty red. They flew out of some of the FANG stocks. Tesla's pretty red. Google was positive. So we see the top news now is all the debt ceiling. 100% different than 2011. We'll talk about what happened in 2011. Banking inflation concerns. We'll talk about that. Disappointing consumer sentiment data. Again, the reason for the decline on Friday, and we'll look at what that Michigan consumer sentiment survey said. Saw crude oil briefly actually broke below 70, then it bounced right around 70. We'll look at some opportunities in that area. Again, natural gas been pretty range bound. We saw it popped up a little bit, but again, pretty range bound between 2 and 3. Gold and silver and a lot of the basic materials took a hit later in the week, and we'll see what the futures look like in those regards. And then we also saw the dollar strengthen a little bit over 102. We'll see that in the futures. So the foreign currencies declined. Then we saw the Treasury bond yields all perk up a little bit. You can see the inversion in the curve is kind of straightening out, at least in the 5, 10s, and 30s. So we don't have a longer term inverted yield curve. But again, we'll talk about what this debt ceiling is impacting in terms of the shorter term Treasury bond yield curves as well. So we'll look at each of the indices. Look at the SPY real quick. We can see that resistance line. It's testing that resistance line, has yet to be able to break out of that resistance, where we're getting in a ascending wedge. But again, that's very heavy resistance, around that 416, 415 level. And again, I expect it to continue to be, test that resistance level, continue to be rejected off that resistance level. Again, also considering we'll talk about, strategies with the debt ceiling, flight to safety, et cetera. And, we can see it's just been oscillating in this range, very range bound, very choppy. And we've been talking about that for a long time and how to trade and make money in that kind of range bound, choppy environment. We look at the NASDAQ. The NASDAQ has made a positive run, broke out above its previous high. Just a sec, let me mute a sec. So again, we see the NASDAQ broke above its previous high. It's, possible that it will go and test that former high there as well. So again, big run at technology. You can see it's quite above its moving averages. We had a golden cross. So again, much more bullish than the NASDAQ. Dow, and we see, it's tested that or came close to testing that high and rolled over. It's supported by its near-term moving average. Still got some downside risk down to the longer-term moving average. So, much more bearish on the Dow. Again, that's industrials, and we'll talk about, recession fears, etc., as well as the debt ceiling impact on the Dow stocks. Look at the IWM, the Russell. And the Russell's been very weak, can't break above its moving averages. It's, pretty range bound, hasn't broke down below its previous low, but again, very weak, a lot of resistance, a lot of overhead resistance in the Russell. And again, your small caps are, much more sensitive to rising interest rates, high recession risk, etc. Good morning, the Ricky Khan. Thank you for joining us. Glad to see you. Hope you're doing well. Look at the VIX. We really didn't get a lot of, got a little bit of a perk up. It popped back up over, 18, didn't quite break over 20. It's now sitting around 17. Again, these are the VIX futures, so it's a little bit higher than the actual VIX itself. So, even though there's all this talk about the debt ceiling, the, recession fears, etc., we're just not seeing that reflected in the VIX as of yet. However, as we'll talk about in our trade idea strategies for this week, this is an area, where we might see increased volatility, and that might offer some opportunity to take advantage of that increased volatility given the fears and with the debt ceiling, etc. Particularly as it looms closer, again, I would expect, some increase in volatility. Thank you, Tony Roses, for reminding people to hit the like button. We sure would appreciate it. We would love to get our content out to more of our fellow traders out there to join us, build our community. Good morning, MD. Thank you for joining us. Hope you're doing well. So we'll look at the groups, the sectors, the industries, how they perform this week. So on Friday, again, somewhat of a flight to safety and utilities. We see a sector rotation. We've been talking about this rotation in and out of energy, rotation into basic materials. We see for the week, basic materials and energy were the worst performers. So on Friday, we saw that rotation back into some of the worst performers, basic materials and energies. Cyclicals, again, we got the inflationary fears, recessionary fears, and cyclicals were outperforming, so they became the worst performer of Friday. So again, sector rotation, we've been saying for quite some time, while the indices are range bound choppy, the name of the game is to play the sector rotation. And one of the best ways to see that is, whatever's the underperformer is going to likely be where they're going to flow money into. They're going to take money out of the outperformer, flow money into the underperformer. And we've seen, energy basic materials for the month have been the underperformers. So again, on Friday, we saw the money flow into those areas. We've been watching real estate slowly, try to make a run up the chain, still encountering a lot of resistance due to the office space and some commercial real estate resistance. Thank you for the positive feedback, Tony. I greatly appreciate it. So again, we'll look at the industries, a breakdown. So this was interesting. The big pop in solar. I guess the First Solar is trying to do a deal in Europe, and also there was some regulatory passage that was positive for the solar industry. So even though First Solar had very poor earnings, some of the others, I think Enphase, etc., their earnings weren't very good. I think those guys are all losing money. There was a very positive pop in the sentiment in solar. We'll see how long that lasts. I would expect a rotation back out of solar pretty quickly. So a little bit of recovery in some of the basic materials. Copper had been beaten down, steel been beaten down. We've been playing the sector rotation in uranium, and tomorrow we'll talk about trying to take advantage of some of those sector rotations again. Silver, again, very beaten down this week. Had a little bit of a pop. Gold is down around 2,000 again. We talked about, coking coal and how we've been playing that sector rotation. So we see it declined on Friday. Again, might open up another opportunity in that area with another sector rotation, thermal coal, etc. So again, for the week, solar had that big run on that positive news. Uranium was positive for the week. And I know gold, silver, copper, all were pretty negative for the week. So a lot of push down in gold, silver, copper, potential opportunities there. Also, we saw coal, steel, aluminum, all pretty negative. Again, recessionary fears. There was some issues with China not reopening, not developing as quickly as people had expected. So a lot of those industrial materials took a big hit this week. But for the month, haven't been performing too badly. Residential construction, home builders doing pretty well. Again, gold, silver for gold for the month. So again, I think there's some opportunities. Silver very negative for the month. So again, I think there's some opportunities to play those rotations back into some of those areas. It's very possible. Again, we've seen, Tony's asked about puts on solar. I would definitely watch it to see when that rotation, when that sentiment turns, and there may be some opportunities to play those short. Now, I don't know of an ETF to play the solar sector short. If you want to play puts on the individual stocks or on the ETFs, TAN, RAISE are the two ETFs I know of in solar. But again, I don't know of a ETF to play solar short offhand. Okay, let me bring up the economic calendar from investing.com. We'll look at through the economic data from last week, what's coming up next week. Let me grab a drink. I'll talk about some of my highlights, things noted for the current week. Okay, so really there wasn't much Monday, Tuesday. Wednesday we got core CPI. It's notable. So again, the core CPI month on month came in line, year on year is pretty much in line. The headline was pretty much in line, but the year on year was a little bit below expectations. So that was positive. So the headline CPI year on year dropped below 5%. So as we've been talking, inflation is very slowly inching its way down, which is positive for the Fed, means they're slowly having an effect. But they want to see it continue on a downward trend and continue for several months, is what they said. So I don't expect that to change their stance very drastically. Saw oil had a major build, and we did see the oil price drop below 70, push down below 70 again briefly. But again, I think that's more on recessionary fears than on the actual inventory numbers itself. Then Thursday, we got PPI, Producer Price Index, and jobless claims. So from the inflationary producer price standpoint, again, year on year was a little bit below expectations. Month on month was as expected. So again, the year-on-year inflation, same message. Inflation is slowly coming down on both ends of the curve, the front end of the supply chain and on the consumer standpoint, but it's slow. So again, I don't expect the Fed to, they might pause or they might go 25 in June, and we'll talk about that as that gets closer, but nothing drastic. Now from the jobless claims standpoint, the initial was significantly higher than expected. So more people lost jobs in the current month, but the continuing was a little bit below. So some of those people are finding jobs. So the job market is still pretty resilient. The 4-week average is a little high, but again, the job market is still relatively resilient, as we've been saying. Same way with inflation. Unemployment is slowly ticking up. So again, the Fed doesn't have to be terribly worried about the job market collapsing given their current action. So again, they can take further action to kill inflation. And again, inflation's still high, moving slow in a downward trajectory. Welcome, Walter Lyons. Glad to see you. Thank you for joining us. So I'll just whip through some of the other data. Employment trends, it's a little more negative than expected. Small business optimism is decreasing. Again, we've got Fed speakers coming out that will add some volatility. We'll see we've got more coming this week. So we talked about CPI data, oil inventory, PPI, jobless. Natural gas storage was up more than expected. And again, although, even though that was the case, natural gas bounced up a little bit. Again, just very range bound. We'll see that in the futures. Again, more Fed speakers, import-export. And then we got the Michigan consumer sentiment, and what kind of triggered the downturn on Friday was the long-term inflation expectations are higher than expected. And so consumers are expecting inflation to be persistent for a longer period of time. Overall sentiment dropped. So current conditions, again, the consumers aren't as happy as they were, and they're expecting higher inflation. So that was the negative kind of. Normally, this Michigan consumer sentiment doesn't move the markets a whole lot, but in this case, it kind of did, because the long-term inflation expectations was higher than expected. Again, we're seeing the oil rig count tick down, so supply is slowly decreasing, and despite that, I don't think people are paying much attention to that. Oil prices still went down. I think, again, the recessionary fears is what's triggering the oil prices, as well as even natural gas and the industrial materials to decline. So next week, again, Fed speakers Monday. We've got retail Tuesday, industrial production. Again, these will tell us something about recession. Again, more Fed speakers. Building, housing. So again, the housing starts, permits. Home builders should probably be doing okay. It's the existing home sales that I think will continue to decline. And then Thursday we get jobless data. We'll see, is the job market still weakening? Is it drastic? Again, typical oil, natural gas. So we've got a Powell speak I'm sure people will be paying attention to that and see if he says anything about the debt ceiling or any of the economic data potentially causing the Fed to pause. They've already said they're not going to pivot. I don't expect any kind of pivot this year, but maybe we'll get some indication of what the probability of a pause is. So we're still also in earnings season. You can very quickly see the earnings calendar here in investing.com by just clicking over to the earnings tab. Again, earnings matter. Anybody that misses, gives poor guidance, they're going to get punished pretty severely. If they beat and give positive guidance, they might be rewarded. Might see a rotation into those stocks. So it's worthwhile. We see some energy, some utilities. Again, you can take a look through this whole list and see if there's something that would affect either the stocks you own or looking to buy, or in the same sector in those regards. So it's worth keeping an eye on that. See some 3D printers, some biotechs, again, quite a mixture. Most of the big FANG stocks, megatechs, I think have all reported now. We've got some mining, etc. So I'll let you peruse through that, and I'll show you in a second where we can find a nearer term calendar in Webull. Welcome, Flippa the Shippa. Thank you for joining us. Glad to see you as well. Hope you're doing well. So just a reminder, the next FOMC meeting is the middle of June 13th, 14th. So we've got a little bit of a reprieve, although, again, we're going to hear a lot of the Fed presidents coming out talking. So, again, we'll get some hawkish, more hawkish, some more dovish. What's the probability of a pause in June? Again, in the market, we'll have some volatility, have some reaction to those comments as they come out. In addition to the earnings calendar, we have a couple channels in our free Discord. I'll put the link up in the banner as well to our free Discord. We publish both the economic news, and you can get earnings data, dividend data, etc., in various channels in our free Discord. So again, you can find a link in the description box below. Join our Discord for free. So again, when the economic data comes out, I try to post that as quickly as possible in the Surf the Markets channel in our Discord. And we also have some automatic feeds, like from Walter Bloomberg. As news comes out, interpretations of that economic data gets automatically posted to the Surf the Markets channel. And again, as the important economic data comes out, I tend to snapshot it out of investing.com and post it there as quickly as possible as well. So great source for getting up-to-date, real-time or near real-time economic data. And also, again, we have another feed with earnings news in the earnings report channel. So again, you can get near real-time reports on the earnings reports very quickly by joining our Discord. So now we'll look at the market screen in Webull. Let me grab a quick drink. I'll put up the Webull's current offer if you're not already using Webull. Okay, so there's the market screen and the online browser version of Webull. Again, we use Webull for our market analysis, our due diligence, the majority of our trading. So if you're not already using Webull, you can see you can both get up to 12 free stocks worth up to $3,000 to $3,000 each. And they're also offering an introductory offer of 5.8% on your idle cash via their cash manager feature for new accounts. So again, if you're not already using Webull, it's our preferred platform, good offers. So again, in addition to the histogram, we can see we've got, it's pretty more decliners and advancers on Friday, small percentages on both ends. Net inflow, again, even though we saw the NASDAQ running up, the net inflow was negative for the NASDAQ. So, and significant, the NYSE had positive inflow, the NASDAQ had negative. So even though the indice is going up, the cash is flowing out of the NASDAQ. And what that tells me is, again, like we've been saying, it's mostly the big mega cap tech companies, the FANG stocks that are essentially driving the NASDAQ, NVIDIA, Meta, Google, etc. We saw Google was up. So again, it's those mega cap tech stocks that are holding the NASDAQ up, and they're being treated as a flight to safety, so we'll continue to see that as well. You can also see the near-term earnings calendar here in Webull. So again, I think this is a great way to see what earnings are coming up in the very near term. So you can see what near-term impacts some of those earnings. And you can see, is it before market open or after market close? And again, that'll update during the day. So let's look at the industries for the week. And we see renewable energy, that's probably the solar. So we see First Solar was up. Aerospace, utilities, again, flight to safety. So this is a risk off move to utilities. And we'll see that rotate in and out. Construction was positive. Auto was generally pretty negative. Holding company, so any kind of fintech. Again, we still got the bank collapse. We've got risk of PacWest going out. We'll see if it disappears this weekend or not. So any kind of financial fintech is probably going to be negative. Construction, moderately positive. Uranium, again, we saw was positive. And again, tomorrow we'll talk about several that we're looking at. Again, getting back into to ride that sector rotation back up into uranium. IT is pretty split, pretty low. Look at some of the ETFs, how they performed on Friday. So short China, emerging markets, short China. So again, negative sentiment on China. The reopening's not occurring as fast as people had hoped. Up on the VIX. Short on the Dow. Again, we saw that roll over in the Dow, so it's short on the Dow. Short small cap. Again, IWM we saw was weak. Bear on S&P, so short on S&P. So, the sentiment Friday was pretty negative. The bet short on the S&P. Short small caps. And again, China, short China. Just a quick reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content should be considered for educational and hopefully some level of entertainment purposes only. So industry-wide, we see utilities, energy, those were the rotation for Friday. Industrial's pretty negative. Again, that's Dow. Healthcare was negative. Basic materials, mostly negative. Split technology, very negative. Cyclical, again, that's a risk off rotation. So risk off, out of consumer cyclical into consumer defensive. Real estate generally negative. Again, that's mostly office space and some commercial, but it's hitting the whole real estate sector. And again, as we talked, anything financial related is generally negative. Commodities, again, we saw a little bounce in natural gas. Got nickel and aluminum up a little bit. Natural gas, nickel, aluminum, cotton softs, coffee, and we'll see that in the futures in a second as well. Treasuries, so long, 7 to 10, 3 to 7. Inflation expectations, again, we saw consumer sentiment was a little higher inflation, so that one got some boost. Again, China, negative, all the currencies, again, dollar strengthened a little bit. So we'll look at the futures quickly. So again, we see that rollover in the Dow, looking to test previous low. If it breaks that low, that would be pretty negative for the Dow. Again, S&P very flat, just testing the resistance, wicking up, but pretty much range bound, heavy resistance in that 4150 or so area. But the Nasdaq, had made a run up, made a new high. And then slight rollover, so we'll see if it comes back down to test previous low or if it can continue the generally upward trend. Welcome, Douglas PC. Glad to see you. Thank you for joining us. So MD says a lot of layoffs in Asia, China. So again, we see, the Russell on a pretty negative trend. Let's see that longer term trends, generally down, generally negative. Looks like the Russell, could be headed back down to test its previous low. Nikkei had a little pop. All the markets, Europe, pretty range bound, peaking. And we see that roll over in oil. So oil went up, low 70s, rolled over back down to, actually dipped a little below 70. Looks like it's on a significant downward trend. We'll see if we get the wick down to below 70, 65-ish. Tomorrow we'll talk about opportunities that we're looking at to play that if we get a rapid decrease in oil again. I think there's a nice opportunity in that regard. So again, tomorrow we'll talk about how we're playing that decline and potential quick decline in oil. Natural gas, again, been pretty range bound between 2 and 3. Just dips down, bounces back up. Looks like it's making higher lows, but again, very range bound. And again, as we always say, if you're short-term trading, day trading, whatever, there's plenty of opportunities to use the leveraged ETFs, get a good swing in those natural gas or oil, etc. But you have to be nimble and be careful. So gold, as we've mentioned, is, it's got pretty good support right around 2,000. It's, declined back down to that 2,000 level. We expect, a bounce somewhere in that 2,000 range, a lot of support in that range. So and then we'll see if we get a bounce back up. It did recently, make a new high. When we get to our strategies, I want to look at some longer term views on gold and silver. We see silver really got pummeled. I think it got pummeled along with copper as like an industrial metal. A lot to do with the China reopening not happening. So we saw palladium, copper, silver, etc. Platinum all took a significant dump. Silver, it looks like it's retesting that previous low in the 24 area. So I wouldn't be surprised to see a significant bounce in silver, both from a store of value standpoint and, a recessionary fear, etc. So I think there's a significant opportunity if you can catch that bounce in silver, that could be significant. Copper is more industrial. I think the recessionary fears, etc., will weigh more on copper. Agricultural products been very volatile, some up, some down. We've been watching this decline in wheat. It stabilized briefly. We'll see if it's going to come down and test that previous low again. And again, tomorrow we'll talk about, how we're playing that potential opportunity there. And we see the bonds have been generally pretty flat, stable, just choppy, oscillating, not a strong direction. And we'll talk about in a second how the debt ceiling looming fears may impact the bond prices and bond yields. And we saw the dollar, strengthen significantly. We had inflationary fears, recessionary fears. The dollar popped back up to 102. Obviously, that weighs down on dollar-denominated commodities, gold, silver, oil, etc. But even despite that, gold held up pretty good. Silver obviously took a hit. Just checking the chat a second. Guys are having a good discussion. Always like to see our fellow BeachBum traders helping each other out, sharing ideas. Got a great community. Again, y'all can continue the discussions by joining our free Discord and continue the chat anytime. So we talked about the news feed. So let me grab a quick drink and we'll talk about our strategies, trade ideas for making money, trading while the debt ceiling's looming, protecting our capital, etc. Okay, so we've got this looming debt ceiling, and we heard essentially nothing's. We'll hear a little bit of news from staff members having meetings over the weekend, but Biden and the principals aren't going to meet until early next week, and they have a very short time frame before Biden leaves for, I believe it's Asia, to come up with some deal. If they don't, there's high risk of at least a technical default sometime in early June. That's going to cause, volatility, fear, etc. Particularly if it looks like they're not going to come to a deal and we're going to at least go into a technical default. So a lot of the discussion, a lot of the news is going to be, are we going to default? Aren't we going to default? What's the probabilities? So I expect, increased volatility. Again, we've seen the VIX has been, it's still below 20, so we're not seeing the volatility yet in the VIX. But as that fear increases, we might see an increase in the VIX and volatility. Obviously, our preferred play on volatility is using UVXY, which is the leveraged ETF on the VIX. We're already along UVXY, but if again you want to play that, and we've got a couple other ETFs we can look at tomorrow on how you can play the increase in volatility, both long and short. Significant downside risk. So you definitely want to protect yourself against a potential downside risk. In 2011, which is the last technical default that most people are comparing the current situation to, the markets went down 20%. So again, you definitely want to protect yourself, whether it's hedging with volatility, whether it's shorts, puts, etc. Stops. Definitely, we want to protect our capital against that potential. The probability of such a default, they're currently betting using default swaps at 4 times the rate of 2011. So they're saying there's a 4 times probability of what they were betting that we're going to have some kind of default compared to what the bets were in 2011. So, the probability is non-trivial. The downside risk is significant. So again, make sure your capital is protected. However, you want to best hedge against that potential risk. Again, shorter term bonds, anything that's bridging this potential default, be it a month, a couple months, those bond yields are much higher, so those prices are much lower. There's a lot of selling pressure in some of the bonds because of the risk, and we'll talk about some of the risks to the treasury bonds as well. So what happens or what are some of the potential consequences of even a technical default? Well, one of the things they could do is shut down government services. So shutting down government offices, closing parks, etc., which means those people essentially are not getting paid. Those services aren't available during that time. So negative consequences based on that. So obviously any of your companies or stocks that are dependent on some kind of government service could be negatively impacted. Government contractors may not get paid. So that's defense contractors, any consultants, contractors that work for the government. They might not be able to get paid for a while. And again, that may have a negative impact on those companies. I don't know if any of you remember or were around during the 2011 default and the subsequent sequester, but that definitely put a cap on the defense contractors. So again, watch for some negative impact in defense contractors, other government contractors. So, Social Security, and this will be very negatively received, is if Social Security recipients don't get paid or others receiving government assistance can't get money, be it SNAP recipients, etc., if they can't get the money that they're normally receiving, that's obviously going to be societal, very negatively received, a negative impact. Non-essential government spending like infrastructure could be put on hold, and the Speaker of the House wants to cut, so things may get cut. And if your stock, or if you bought a stock based on something with the infrastructure bills, spending, etc., that may either get put on hold or it could go away. So again, risk to those types of companies. Just be aware, act accordingly. Interest payments on some bonds might not be paid. So some of those short-term bonds, that interest might not get paid in the near term, and a true default would be if it's not paid at all. And obviously that would have significant negative consequences. Borrowing costs. If the U.S. gets a credit downgrade again, borrowing costs for everything go up because the risk goes up. So business loans, personal loans, essentially it's the equivalent of an interest rate hike, because even though the base Fed interest rate doesn't go up, the overall interest rate that people are charged for a loan will go up. And so again, it'll have the same impact as a abrupt interest rate hike. Potential for higher unemployment. Again, as all these negative consequences hit during the sequester, government defense contractors laid off. They offered retirement packages. They reduced workforce. So again, if this negatively impacts the economy, we'll probably get higher unemployment, and this might accelerate our decline into a recession. So one of the things, again, I was talking about silver and gold. I hypothesized that we might see a rush to stores of value because, like bonds not getting paid, etc., and potential risk to stocks. So you've got risk in stocks, risk in bonds. So where do you put your money to secure it? Well, typical flight to safety store of value is gold, silver. So again, gold and silver had a major decline. So I want to go and look very quickly at what happened to gold and silver in 2011. So if we look at the very long-term chart of gold and we look at this previous peak here, that's 2011. So again, there's a high possibility that if the risk of this looming debt ceiling, looming default increases, the fear of that increases, we may see a flight back into gold and silver. So there's gold, 2011. We look at silver, see the previous high, boom, 2011. So again, that's where I think there's some significant opportunity as this debt ceiling looms, as the fear potentially increases. People try to preserve their capital. I think one of the places they may head is gold silver. We saw again gold silver decline. So again, I think there may be opportunity there. So let me know what you all think. I'd love to hear your feedback as well. As where do you think people are going to try to hedge their risk against this looming debt ceiling? Okay, so just very quickly, some other strategies that you can see is we've been talking about how to make money trading in May in general, historically, etc. And we published a number of videos that you can listen to via the links in our notes about how to make money trading in May, how the stock market typically performs, best performing sectors and industries, and why we don't think you should sell in May and go away. Although we may see that type of behavior, probably are seeing some of that already. We talked about the risk of further bank collapses. Again, PACW is still at risk. WAL, there's talks, again, a lot of the Western banks. So I don't think this is over. It's just a matter of who's going to fall next and when. We saw major outflows. If you look in the news channel in our Surf the Markets channel in our Discord, you'll see the reports of the outflows from the banking over the past week, and there's significant outflows of deposits continuing. So you can scroll back up here and find that news recently in our Discord. Talked about sector rotation. I do want to quickly look at this screener I've added in our ETF spreadsheet. Just a quick reminder, our all access and VIP Patreons have access to this ETF spreadsheet and all of our screeners, etc. I'll put the link up to our Patreon. So again, if you join our Patreon at the all access or VIP level, you can access this spreadsheet and all the information there, including these screeners. So I wanted to very quickly look at the technology components one. I find this very useful. I'm debating, and I'd love, again, all your feedback. I'm debating about moving the whole discussion of ETFs up to part one of our weekly trading game plan versus part two, where we typically go in more detail. So let me know if you'd like to do the ETF segment of our weekly trading game plans in part one. It kind of fits in either one. It's topical indices, commodities, sectors, etc. Is what we have in our ETF spreadsheet. So what I thought was interesting in here is how the FANGs have been running up. It broke through that upper trend line in resistance. Again, they've been, flight to safety into the FANGs, store value into the FANGs. And I think, we can see it's in a slight uptrend, broke out of the resistance, dip back low, but it's been, bouncing off of these trend lines. If it were to try to test that previous high, I think that's an opportunity. Also, we can see it's on a downtrend. FANG-U is the leveraged ETF up on the FANGs. FANG-D is the leveraged ETF down on the FANGs. So there may be an opportunity there. Although, again, the flight to safety is into the FANGs. So if you do play FANG-D, you want to be a little bit careful. Biotechs, again, bounced off the upper trend line. Looks like it's going to decline. So again, if you want to, biotech shorts, LabD, TQQQ, again, the whole NASDAQ's on an uptrend. It's not as strong as the FANGs. You see the difference in the strength as well. And then you see the weakness in semiconductors. So although all the other technology sectors are pointing up, semiconductors is pointing down. So again, a lot of weakness in semiconductors we've been saying for quite some time. The guidance in the future of semiconductors is pretty negative. It finally did reject, bounced down. Pretty much the only thing, primarily holding it up was NVIDIA with the AI trend. So the short on semiconductors, success. It looks like it's flattened out, consolidate a little bit, but we could have significant more downside. So if you want to play semiconductor short, success is the leveraged ETF short on the semiconductors, and we know several of our BeachBum traders have done quite well in those regards. So I hope that also helps. So again, our all access and VIP Patreons you can view that. That's real time off of FinViz. Also, we have the data of various ETFs or the indices, commodities, etc. in our ETF Google Sheet. So in addition to talking about the ETFs tomorrow, we'll look at potential opportunities in dividend payers. Again, that's a way to make money while you wait for either this debt ceiling issue to get resolved, or if the market does happen to crash and bounce off this debt ceiling, the default issue, you can make money while you wait with dividend payers, and also our option strategies, which is selling covered calls, selling and buying back covered calls, selling and buying back puts. So we'll talk about opportunities in those specific areas tomorrow. So if anybody has any last minute questions, if I missed your question, I apologize in the live chat. Please throw it back up in the live chat. I'll try to address it. Also, you can always put your questions in the comments to these videos, or you can ask in our Discord. Just please tag us in our Discord. We're BeachBum Trading. Tag number 7313. If you tag us in the Discord, we'll try to respond to your question as soon as we're able. We also have a Facebook group, a Reddit community, etc., and all of our social media sites. You can always direct message us in social media. You can find the links to all of our social media sites in the link section of our homepage, which is beachbumtrading.com, bum without the U. And I'll also put that up in our banner. So again, plenty of ways you can contact us to ask questions. If there's anything we can do to help you succeed in your trading career, make money trading, that's why we're here. That's why we do all this. We do all this, for free. We do all these videos, all this content, it's all for free. So again, let us know how we can help. And otherwise, we hope you'll join us back for part 2 tomorrow, and we'll select our individual stocks, ETFs, etc. for our top swing trading stocks to watch list, our bullpen. We'll talk about shopping list, and again, we'll talk about our dividend payers and option strategies to generate income while we wait for this debt ceiling issue to get resolved and the markets to choose a direction, start to trend where we can have more reliable trading opportunities. So again, we hope we'll see you all back 10 a.m. tomorrow for part 2, and we hope you'll have a great Mother's Day as well. So we look forward to it, and you have a great day, and thank you for watching. Bye.